tradition of Angel and organizing team of Hedera Council Incubator program. We're delighted to have all of you joining us today as we showcase the remarkable progress of our founders that have been throughout this 4-week incubator journey over the past month. 9 outstanding teams have worked closely with experienced mentors, participated in hands-on workshops, and refined our products, business models, and investor pitches in preparation for today's showcase. So the Hedera Incubator ran from 18th of May until 12th of June, bringing together founders from around the world who are building innovative solutions on the Hedera network. So today they are opportunity to present everything they've accomplished to our mentors, ecosystem partners, investors, and the wider Hedera community. So to every participant, thank you for your dedication, your willingness to learn, and for showing up consistently throughout the program despite your busy schedules. We know how much work has gone into preparing for this day, and we're excited to see you as you share your progress. So a quick few reminders before we begin. If you're watching live, feel free to submit your questions through the live stream chat, and we will release the questions during each of team's Q&A session if time permits. Okay, no promise, but if time permits. You can also join the Hedera Discord to continue the conversation with the participating team after today's event. You also notice the QR code on the right side. I don't know if it's on the left side, but you also notice the QR code there on your screen, and it to learn more about each participating team's explore their projects and watch their demo videos. And of course, we are honored to be joined today by our partner from Hedera Ventures. Our mentors and judges and ecosystem leaders are also on the back end watching right now. Thank you for all your support. For all support for this founders throughout the incubator and for joining us today. Our showcase will run until approximately 12 noon Eastern Time, with each team presented, followed by a Q&A with our VCs. Without further ado, I'd like to invite Jake from Hedera. Go ahead, Jake.
I was on mute. I think, okay. Thank you very much, Sherlyn. A few technical difficulties. Yeah. No, I'm really excited for this. I don't want to take too long, because I think people here that they're watching it so that they can see the incubator participants. I'll just say a few words. And I think when I started the incubator, I was talking about having really putting the 3 Ps in front of all of the participants, and that is prioritization, working with them to identify what is that 20% of work that's going to have the 80% of outcomes. Thinking about partnerships, how can we work together within the incubator with other partners, with the wider Hedera ecosystem, and of course the council as well, where relevant. And we've done all of that stuff. And then of course productivity. How do we actually make sure we execute on all of the ideas that we drafted and the roadmaps that we created? And I'm very confident to say that every one of these teams have done the job. We've had introductions and meetings with different council members, with different team members, people working together. So it's really exciting, and we're going to see the fruits of the efforts today. Big shout out to our partners, Hedera Ventures. For those of you who don't know, I'll hand over to Dara to give a bit more context. But they're a VC which was recently set up in the Hedera ecosystem. They're based in Abu Dhabi. And Dara, I'll hand it over to you.
Yeah, thanks guys, and thanks Jay, and thanks for everyone involved, and for inviting myself and the team to participate today. I think we're super excited to see what's on offer. We've had an in-depth look at what's on offer this evening. Well, this evening my end, early morning your end, and yeah, we're super excited. So, you know, as Jay mentioned, we're quite new on the scene. We launched in December of last year. We're a $100 million VC fund regulated out of Abu Dhabi, ADGM. And yeah, we've been super active since, January. We're averaging about, I'd say, 1 investment per month. Ticket sizes, we're doing anywhere from 500,000 to 1.5 mil. And we are partners with the likes of Hashgraph, with the Hashgraph Association, the Hashgraph Group, everyone under the ecosystem really. And yeah, we're super excited to see what's on offer. Given the fact that we do have limited time, I would encourage just focusing on the pain points, how you guys are solving said pain points and why you guys are the team to do it. So I think that's what we're interested in. And just a quick introduction, I'm joined by our head of venture, which is Will Patterson. You'll see in the top right screen, the good looking red haired guy there. Also by Jeff. He's one of our analysts at Hashgraph Ventures. We have a third team member, Arjun, who will be joining us if he's not here already. But there'll be plenty of questions from our side. So best of luck to everyone involved, and I'll pass it back to Jay and the team. Thanks, guys.
Yeah, thank you very much. So the first presenter is going to be HBank today. And just a reminder to everybody who's going to be presenting, you've got 4 minutes to pitch, and then we'll have about 2 minutes or so for questions. We're going to have to be quite tight on time, quite strict, just because there's 9 of you. And we don't want to be on here until, well, it's 10 past 10 over here in Singapore and Malaysia, where Shelley and I. So we're going to have to be strict. But I guess without further ado, let's get straight into it. And if we have Arjun on the stage, backstage, if you could also bring Arjun on too from Hashgraph Ventures, that'd be great.
We found him.
Yeah. And just a polite reminder: if you are going to be typing, make sure your mic's turned off, because there's nothing more distracting than a gentle tip tap when someone's presenting. So that's just the thought. Presenters, keep an eye on the private chat. We'll be putting times, 1 minute left, 10 seconds left on the private chat. So just keep an eye on that if you can.
Oh, hello everyone. I didn't know I was live already. Let me share my screen so we can all see the pitch deck. I hope you're seeing it now. Can you confirm, please? Can you confirm, please, you can see the deck?
We can see the StreamYard web application.
Okay, wait, my bad. Okay, so I can share screen, share. It only allows me to share screen. So allowed to share. Okay, no. Okay, now it should be good. Okay, by the way, I thought I had 5 minutes, so I'll try to keep it under 4 minutes. But yeah, my name is Salva. I'm the co-founder of H1. We're trying to build the private on-chain yield layer. So basically, at H1, we're solving the problem that is access to on-chain yield. Today, almost 70% of all the USDC on-chain, almost $45 billion, remains idle. And at the same time, we have traditional investors, financial service providers that still lack a clear and compliant way to access or offer access to on-chain yield. So this is happening because there's a huge wall of complexity, fragmentation, operational risks, and privacy concerns that separate institutions from this opportunity. And this is what H1 is gonna solve. Our mission is to package these institutional-grade yield products into a developer-friendly SDK that fintechs can integrate. So fintechs can integrate private on-chain yield in just a matter of weeks. And we achieve this by leveraging both Hedera and HashSpheres to deliver transparent, compliant, and privacy-preserving yield infrastructure that can distribute yield products across any blockchain. And honestly, the timing couldn't be better, because just 10 days ago, Morpho, one of the leading credit markets on the ecosystem, together with Sama, the leading privacy protocol on top of Ethereum, launched a confidential vault that within a few days was on the top 20 vaults on Ethereum and reached a TVL that is over 25% of the total stablecoin market cap on the Hedera public network. And most importantly, we saw how Morpho co-founder was explaining recently in an interview how the fintechs that they are working with, integrating their products, they are, as they understand how the playbook to go on chain works, they are also increasingly asking for confidentiality and these layers to preserve the client privacy. So in our opinion, this statement this launch, the success of this launch validates our initial thesis. So yeah, the timing seems perfect. The market opportunity is real. The on-chain economy is also maturing. Yield opportunities are becoming more diversified and sustainable, but there's no clear winner in what comes to infrastructure, in privacy first, compliant distribution. This piece is still missing. We've seen some actors in the yield as a service vertical, but their solutions are mainly based on accessibility and distribution, not on privacy. And the few ones we saw on that focus on privacy still remain isolated to one chain on one yield source. To give you a little bit of context about our company and where we're at, since February, my co-founder and I have built meaningful traction. We won several awards in multiple hackathons. We launched up to 5 different products on mainnet, and we built an engaged community that generated 200,000 USD, American USD in volume during the closed beta. And most importantly, they taught us many learnings. And we also had a successful partnership with Linksify that got awarded a Thrive grant to build XUSD. That is going to be the first yield-bearing stablecoin on Hedera that is going to launch next month. And in the coming months, we're also going to be working on our non-custodial mobile app with a centralized exchange-like experience that is going to make onboarding dramatically easier, and it's going to allow us to expand beyond the Hedera retail user base that is currently very limited. So this is going to be phase 1 that is going to run until Q1 2027, where our goal is to validate our yield infrastructure and deepen our strategic relationships with Hashgraph as we move into the second phase, where we want to expand the yield product offering. We want to be scaling distribution through third-party integrations powered by HashSpheres and our own SDK. And we plan to collaborate together with Hashgraph and all the HashSphere ecosystem applications such as Seto and DFNS, which is already working with more than 400 banks and fintechs to build the most complete private on-chain financial ecosystem on the market. Our target by end of 2028 is pretty ambitious but achievable. Is having 500 million in TVL, and the business is pretty straightforward. The business model is charging a 20.
Sorry, Salva, we just hit the 4-minute mark. I'm gonna have to cut you off there just because we do have to be time. Did you guys hear that alarm when it came off? Was there? Okay, yeah. So just listen out for that. That's the 4-minute signal. But we've got to be fair. We've got to be fair. If we do 5 minutes for you, we have to do 5 minutes for everyone else. So
the communication wasn't so good because I planned for 5 minutes, so that's a little bit,
okay, we had a call on Thursday where we said 4 minutes, but let's go to the questions.
Okay.
I think if you just want to start by maybe what was another part of the presentation that we didn't get to, just spend a little bit more time on the go-to-market. I'd be happy to hear about that.
So you want me to expand on the go-to-market?
Yes.
Yeah, definitely. So right now we know that HashSphere is not completely working in the way we need it to work, because it needs to be, or at least publicly we didn't find any information to connect Hedera public network to HashSpheres. That's going to be a key step. So while we have this ready, that I guess is going to be ready when Clipper, the cross-chain protocol is ready, we want to be first validating the yield infrastructure on the public network, right? So for that, we're going to be targeting retail investors, and for that we want to bring Javi into our team. He's now a KOL, but he's basically been working with Polygon and Billion Networks for the past 3 years in creating, growing, and managing communities with hundreds of thousands of crypto investors. So he knows how to go to the broader market, because right now we have a pretty established position in the Hedera community, but as I was saying, the retail user base is not big enough to reach that 3 million TVL we want to be reaching by end of Q1. And with that validation, and once Clipper is ready and we can move all these products into the private ecosystem, then we want to be working together with everyone involved in HashSphere, because we don't see HashSphere, or we don't see our product as a separate piece. We see it as a piece inside a broader ecosystem that is going to be living in HashSpheres. And there we can collaborate with other players and align everyone to have a very strong offer for our clients.
If we have time for one more, maybe in 2 sentences or less, like, so you've mentioned retail and institutional, like, which piece would you say is a bigger part of your go-to-market, or to that first X
No,
million in TVL?
yeah, no, definitely institutions. Like the first, as I was saying, the first stage is basically validating the infra with retail to also have some credibility. Morpho followed the same playbook. Morpho started with crypto investors, and now they are integrating with institutions and with third parties through their SDK. So in this sense, we're having a similar go-to-market strategy. First validate and get some reputation within the crypto community, and then with that knowledge, with that infrastructure that it's compatible with the private ecosystem, then go and get this scale and reach 500 TVL by a million TVL by 2028 by integrating with third parties. So we want to be infrastructure. We want to be sitting on the backstage, and that's the way we want to be scaling.
We got time for one more, Jay?
Let's do one more. Yeah.
Just a quick one about the team. If you could just give me a quick roundup on the two founders.
Yeah, so it's me and my co-founder Sergio. We've known each other for several years already. I have personally 6 years of experience in DeFi, both investing and working on startups, founding companies. Before I've been a software developer, also worked on business development. And then we have Sergio, he's the CTO, he's leading all the technical side in crypto since 2016. Also working in many tech companies, big ones, small ones, tons of experience leading teams also. So yeah, we have been the ones working until now. We also had this partnership with Linksify to accelerate development on the XUSD product. And these are the two guys we want to bring in. Manu, I worked with him in the past in a company. He's now the head of technology at Onice. It's one of Europe's leading infra providers for custodians. And then we have Javi, that, as I was saying before, he's a beast in what comes to marketing, and he will be very useful, especially in the stage one.
That's great. So let's. I said, yeah, I allowed that extra question because there has been some miscommunications. Just to make clear to everybody, we'll do 5-minute pitch, 2 minutes questions. Hence the extra minute just then on the question side. Yeah, so that's just so it's really clear. 5 minutes to pitch, 2 minutes to question. We'll have the air horn going off at the 5-minute and at the 2-minute mark, which would be, yeah.
All right. Do we have any other questions from our VCs? Or would you want me to move forward to our...
No, let's go to the next one. Go to the next.
Okay. Thank
you
so
very much,
for
Alba.
that,
Thank you so much.
Thanks a lot. Bye-bye.
Okay, we're now calling Cradle Protocol, Donald and Dennis.
Hi, hope you can hear me and see my screen.
I believe
Right.
so.
Okay. Yep. So we are building Cradle Protocol with the aim to streamline tokenization and compliance for exchanges within emerging markets so that their assets can be confidently tradable on-chain. The global signal for this has been the New York Stock Exchange partnering with Securitize to handle the tokenization side of things. And in Africa today, which is where we're best, we have the current exchanges trading over 300 billion with over 1,000 companies listed, and there are over 29 different exchanges listed across sub-Saharan Africa. So though it may seem like a small market, we think within 5 years, it's gonna grow into a lot more. And at the moment, there is no Securitize for Africa, and that's kind of the hole we're trying to fill. We have been in talks with the Nairobi Securities Exchange CEO, Frank Mitty, and he has clearly stated that what they're looking for is a technology partner to help them streamline the tokenization process. And that has informed all the decisions around how we have built our product. So we streamline tokenization and compliance, making sure all assets are tradable confidently on chain. Our product includes 3 different parts, where we have our issuer console, our marketplace, as well as a launchpad. So we cover every step of the tokenization journey, all the way from declaring an asset, providing all the necessary documentation, and carrying out all the due diligence to your assets going live on chain. And our business model is based on we generate revenue from transaction fees for all assets that are traded on our platform. So the Nairobi Securities Exchange, which we have been in close partnership with, is already ready for a tokenization partner. And going forth, we plan to proceed to the rest of East Africa and West Africa and Pan-Africa in general by 2030. The team includes me, Donald, who is a blockchain developer with over 7 years of experience. I've built mostly on Aptos, on Hedera. Dennis as well, who has experience on Celo, BES, and also Hedera. And Hamant Maini, who is our advisor with experience in capital markets and fintech, as well as additional blockchain developer with over 8 years of experience, Martin. So we have already built our tokenization platform and studio and already launched it on testnet. We plan to go to mainnet by Q3 and then begin tokenization of assets from the Nairobi Securities Exchange. So our process is simple. We basically integrate with the exchanges we are partnering with, handle tokenization for them, get the assets tradable on-chain in our marketplace, and going forward, expand to like different asset types within their portfolio. Yeah, that's the presentation.
Yeah, very interesting stuff. I'm mainly curious, like when an asset gets issued on the platform, can you walk us through like the full chain of when the underlying asset gets brought essentially into a token into your wallet? Like who verifies the asset exists, who custodies it, etc.
Yeah, so we provide our issuer dashboard where you'll have the exchanges themselves having the ability to create the assets and then provide all the documentation tied to that asset and all the necessary due diligence tied to verifying the asset is done on, by us before we then handle minting of the necessary contracts on chain. Yeah, so we handle most of the compliance bits as well as the on-chain bits of tokenization and minting. Yeah.
Gotcha. Thank you.
How are you thinking about what assets to prioritize bringing on chain and like prioritizing which assets to tokenize?
At the moment, we're planning to proceed with the assets that the Nairobi Securities Exchange is ready to tokenize. So though we're still in talks about what specific ones, yeah, they would like to go first on a product like this. So I think we're still open to asset classes. Yeah, but mostly just focusing on securities in the exchange.
Yeah, actually, in addition to that, I think a focus on assets with more volume that would be the priority, because not actually the main vision of the exchange is to increase the asset volume being traded currently. So our focus will be to start with those for starters. Yeah.
And realistically, I mean, after maybe this initial go-to-market pilot, expanding beyond, the local market to all of Africa, like how big do you think this gets? Like realistically, how many assets have you mapped out that you could actually bring on chain that people want to trade?
I think the way we think of it is we first need to prove credibility, and we think the market is gonna keep growing. Like within the next 5 years, there are gonna be a lot of people in Africa who are ready to, let's say, trade on chain, and also accompanied with the fact that Africa has like one of the largest penetrations of blockchain technology, and so the audience is already like primed to interact with these financial products. So regarding estimates, we think close to like 2 trillion will be traded by 2030 by Africans on chain. So that's kind of our target audience, and yeah.
I think that horn was the sign of the last question. So that was a total of 7 minutes. I think we can get to the next one. Thank you very much there, Donald and Dennis, for sharing Cradle Protocol. Just an interesting fact, actually, that this is also from the NSE team. In Kenya, currently only 3% of the population own stocks, but 7% own crypto. There's actually more people who own crypto than currently trade in the equity markets.
Great. I guess Epicent team is now ready. Go ahead.
Yeah, thank you. Can you see the presentation well?
Yes, we can.
All right. Greetings, everyone. We are Team FSN, and we're building the operating system for high traffic menus. Give me a second. Crypto is big. Its top was around 4 trillion USD before the crash. And well, we have a really big problem here because we're not using it to pay. Less than 2% is used in real world payments. Let me share our story. We were allocating telecommunication systems in a very underserved community in Mexico City, right? And we had to pay the people living there, and we were unable to do so. So we tried to create something to solve that problem. As a whopping number of 45% of adults in Latin America do not have bank accounts, and this is the reality of that. Now let's imagine that you want to spend your crypto. Easy, right? Wrong. Web3 has issues. We have several points of friction between wallets. You open 5 different applications: swap, bridge, wallet, card top up. That's not an option. That's a maze. While pushing this vision in Latin America, we were presented with an extremely attractive opportunity, which was to actually go to Tokyo and present our technologies in an incubator there. So let me show you instead of just speaking about it. So hopefully we can...
Imagine trying to buy food at halftime in Tokyo Dome with 55,000 people around you. You unlock your phone, open your wallet, use bridges, swap, scan QR, approve a transaction, and then wait. The problem with crypto payments and payments in general isn't infrastructure. It's friction. We believe people don't want to use crypto. They want payments to disappear. FSN turns identity into the payment layer. Every year, millions of tourists that come here to Japan actually have problems just onboarding into the financial system, currency exchange friction, and a lot of fragmented payment systems. Users simply open the web app, navigate to the wallet or pass a step, and take a quick selfie. Powered by AWS Recognition and AWS KMS, wallets are created in seconds with enterprise-grade security. This process generates a fully functional multi-chain wallet, natively integrated with Hedera mainnet from the start, eliminating seed phrases and onboarding friction entirely. Proof audit trail on Hedera. Beyond KMS, we integrate Amazon Recognition to enable scalable Face ID payments. Your identity becomes your wallet. Just look at the camera and pay instantly. Users can select from available tokens. We are here in Indonesia, in Bali to be exact. We introduce you to Desmond, our AI agent, entirely on Hedera mainnet and employs HTS tokens like USDC. This one is done in real time with We go to our and bridges over $50 are executed through Hashpool. Finally, when our own bridge reaches $50 in liquidity, we execute a bridge on Hashpool. We've tested FSN around the world across dozens of merchants and environments. Web3 doesn't need more wallets, it needs better experiences, and we're building them on Hedera.
So yeah, that's just filler. We will be starting with where speed matters the most, and well, as we progress to the incubator in Tokyo Dome City, we gain the trust from the most risk-averse people perhaps ever, and we will be extending that close to a year more, hopefully for a long time, like here in Tokyo. Right now, I'm in sight. This is the first layer of FSN, making payments feel invisible. For us, Hedera is infrastructure choice, a great infrastructure choice. High traffic venues need payments that stay fast, predictable, reliable, even when thousands of people are transacting at the same time. And Hedera gives us fast finality, all that, and equals payment reliability. We already have more than a pitch deck. We have a working system. FSN has been tested in Tokyo Dome's ecosystem, reaching 44 alpha tester, and it is already live in the App Store. And we are pushing almost 500 wallets created. On top of that, the concept has been validated through hackathon wins, real product development across several ecosystems. And the message is simple. FSN is not an idea anymore. It is a working foundation for venue scale payments and visitor experiences. So this is not just a wallet, not just a payment app. We are building the infrastructure layer for agentic commerce, and we have several modes. The most important ones is that we're on site testing it like in a place such as Tokyo Dome City. It is quite simple and scalable. The business model will be just cover a fee per transaction, and on the big side, as B2B side, we will be selling that technology to high traffic venues, and we are actually planning on releasing APIs and SDKs. So we've been validated by NXFrost and Circle. Within that, it is a huge market. We are entering with a focused wedge, and right now we're focused on pilot deployments within Tokyo Dome and another city that is called Atami. Next, we'll optimize the ecosystem with Face ID and the AI Payment Agent SDK API. After that, the goal is simple: expand to more high traffic venue partners. Why this works now? Biometrics UX is finally mainstream. Agents can handle frictions and real-world demands for speed. We are the team to deliver this, as we have the correct background in IoT, cloud, machine learning, AI whenever it wasn't sexy to just do AI, and well, now some years in blockchain, which brought us like all around the world, where we pitch FSN all around and solidified set thesis. And we have built a business fee for Web3 based. Where FSN help us build the operating system for high traffic venues, we're looking for 350K as a pre-seed, and also some venue pilots. If you know anyone like that has any high traffic venue, we are up to anything. So thank you. Luke.
Yeah, so after following the Tokyo validation, is there a certain geographical region you guys are targeting or launching it first?
Well, actually, right now Mexico is actually hosting a big World Cup, and all that infrastructure that is gonna be left there is actually gonna need like some kind of upgrade after all the thing has happened. So I think just by having that opportunity of working with high traffic venues in our native countries, like the next step to do so, because yeah, we have like all this opportunity and actually the chance to go more than a year more on this venture. But right now we're looking back home and see where we can like actually go and deploy this.
Gotcha.
Just a quick one from my side, guys. Firstly, enjoyed the presentation. There's some great acting in the background there. Thoroughly enjoyed it, so appreciate it. Just in terms of the biometrics, where is that data stored, and what are the regulations in Mexico around that?
Well, in Mexico, it's pretty easy to do so because the regulations are very lax. let's say, regarding data providing and data storage and all that, it is much more difficult to run anything here in Japan, for example, related to data protection. So right now we're using just like the best practices that we can related to cloud management, and also, well, Tokyo Dome City is like very firm on what data you can store and you can share and which data you shouldn't. So we're kind of trying to get under those guidelines and actually work with them with that, because it's serious business, just like mismanage data here in Tokyo and in Japan in general. So yeah.
Yeah, and we basically don't send. Yeah, and we basically doesn't store any kind of face photos or something like that. It's a face vector that it's the technology that Amazon Recognition use. So basically, we use a comparative version of Amazon Recognition to compare the face with the vector.
Thanks, guys.
Thank you.
Okay, yes, in top episode, we'll be calling the next team present. Let's go, Ethan.
You can see my screen okay?
Yes, we can.
Hello, everyone. My name is Ethan, and I am the co-founder and CEO for Prism Market Labs, which is a prediction market protocol. Now, I know what some of you are thinking. Oh no, not another prediction market. But I just want to stop you right there, because Prism isn't just another prediction market. So before I discuss what makes it stand out in this growing industry, I want to touch on who is actually behind this company. Because at pre-revenue, the team is everything. So my co-founder, Obi, is a lead software engineer at one of the world's top exchanges and formerly used to work at Visa. He's built matching engines and settlement systems at institutional scale, the exact infrastructure Prism replicates on-chain. Our advisors come from SaucerSwap Labs, the largest DEX on Hedera, advising on tokenomics, legal, and launch strategy. Our team overall has over 25 years worth of experience in the Web3 industry. So current competitors process tens of billions in volume a month, but those platforms charge trading fees on every position, control all resolution, and give users zero ownership. Prism inverts that entirely, where we have zero trading fees, and we charge 2% settlement fee only at resolution. A central limit order book for real price discovery, and a DAO, where the community owns the protocol. And 25% of all revenue funds token buybacks on the open market and is distributed to our liquid staking holders. There are 0 prediction markets on Hedera today. We are the first mover. But the real growth opportunity is arbitrage. Identical markets on Prism and competitors will trade at different prices. Our economics make it the most capital efficient option of any cross-platform trade, which pulls Polymarket's 800,000 plus wallets onto our platform to capture the spread. We start with 400 monthly active users at launch and project 4,000 plus within 12 months as arbitrage migration kicks in. The 5-year path is to establish the Hedera beachhead, then scale as cross-platform traders migrate for the fee advantage. And by year 5, Prism is the default arbitrage menu, and the flywheel will drive token value. So we're live on testnet today and shipping weekly. We've raised over 150,000 HBAR through our initial NFT offering, have 650 plus community members across our social platforms, received a Thrive Hedera grant, and have GRT Capital lined up as our market makers to make sure our most popular markets have sufficient liquidity. And with Halborn starting our security audit within the next 2 weeks. 5 features that define a best-in-class prediction market, and Prism is the only protocol where we satisfy all 5. So mainnet launch and token generation event are scheduled for September 30th. Investors in this round come in before the token is live. From there, 2027 is arbitrage migration, where we clone popular markets from competing platforms. And by 2028, Prism scales as the cross-platform hub. Here's an overview of our tokenomics, where we have 100 million fixed supply and upwards of a 6-year vesting schedule, depending on the bucket. For this round, we are asking for $155,000 for 20% equity and 5% token supply. That will help fund the audit, seed liquidity, legal costs, and marketing costs associated with attracting the arbitrage opportunity from competitors. Thank you for listening, and I'm happy to take your questions.
Yeah, I'm curious, beyond Polymarket and Kalshi, are you planning on integrating with any other prediction markets? Just, I guess, take advantage of those inefficiencies as well?
Definitely, yes. Those two are the primary ones we're looking at, since they capture like the majority of the volume in that industry. But yes, we are looking at other smaller prediction markets, just to cover all our bases.
Gotcha, thank you.
Could you go back to what's already been built and what you still need to work on with this raise?
Yeah, so right now we have built out the core trading features, but we have 3 other features that we need to build out, which is our limit order mining page, where essentially we track the liquidity providers. We call it Q-score, so we can sufficiently reward them for liquidity provision.
And then what does like the on-ramp situation look like if you're working with someone who's never touched Hedera before?
Yeah, so right now that is our biggest friction point for sure. Our goal in the short term is to make it easy for someone to create their own wallet via like email. We're looking into a company called Magic Link to be able to make that happen. But right now, the only way you can connect to our platform is having a Hedera compatible wallet. But yeah, we plan to integrate other wallets to make it easier for cross-chain migration, like I mentioned earlier. And yes, making it as simple as to create a wallet via email or phone number when we launch on mainnet.
And since arbitrage margins are already pretty thin, like how are you thinking about fees? And have you modeled any net returns after gas and slippage and Prism's take?
Yeah, so right now we have our core business model is a 2% resolution fee. And considering the cost of doing a transaction on Hedera, we've already worked that into our business model to make sure that we will be profitable as we continue to scale.
Gotcha, thank you.
But if no one has any more questions, thank you for
Maybe
listening.
one more
I
for
appreciate your
fun.
time.
Yeah, no, I'll just ask one more for fun. Like of the 150,000 HBAR, like how many wallets was that?
That was across 20 different wallets. I would have to double check that, but yeah, our INO is live on Headstarter today.
Awesome. Okay, thanks so much.
Yeah, thank you.
Thank you, Ethan. Okay, now we'll have Torch. Let's go, Dennis.
Hi, everyone, can you hear me fine?
Yes, we can.
Hello. Hello.
Hey, Dennis. We can hear you, Dennis.
Oh, you can hear me? Okay.
Yeah, I can hear you.
Perfect. Yeah, there was no response. Sorry, I'm on the mobile in the middle of nowhere. I have to contest. And I do not know how to share my text, so I will probably just go ahead and speak.
Just going to jump here. Dennis, can you hear us? Because you're cutting out for us. I think my suggestion here is if it would be better for us to push you towards the back in probably about an hour or so. Would that be better for you?
I think that's a yes.
Yeah. Let's go to the next one. I'll text Dennis privately.
All right. Okay, so actually the next one would be Hedera from Hedera. He'll just give us a quick one additional speaking. So please, Hedera, go ahead, started. Go ahead. You're on mute. Okay.
Oh yeah. Hey everybody. Thanks Cheryl for bringing me up. Good to see everybody. Jay, Hashgraph Ventures team, and all the amazing projects that have passed through the incubator. It's been some very hardworking few weeks and a lot of projects that have been relentlessly building all these weeks. I'm personally very excited to have seen the development of some of the projects as weeks progressed. And since I'll be part of the judging panel, I'll be very thorough with their review. Honestly, I want to congratulate the organizers for the initiative. This is something that the ecosystem has needed, and I'm looking forward to continuing to support the upcoming projects from our Head Starter side, or whatever other role that we juggle over the next few editions. And with a new, more clear path in terms of Web3 projects, it's definitely a moment in which the projects, especially the ones that we will be supporting, will be looking into building with more foundations in place, with better business acumen. And this is something that through the course of the incubator, I think we've managed to push into the business models of the projects. Having them built with business, Web3 functionalities and acumen first, rather than pure token projects. And I'm looking forward to continuing to see these projects growth. As the speaker said, some of the participants will be following into a Head Starter acceleration funnel, and we're very keen to support them, not only with their private placement and their raise, but also with their go-to-market and support. As projects in Web3 continue to evolve, like the ones part of this incubator, with better fundamentals for their business in place. Same are the rails for which Hedera projects will obtain funding and will go to market, and we're here to see it through. So kudos to the organizers, kudos to the participants, and best of luck to them, and looking forward to their continued growth and success.
Thank you very much, Tudor. I've been chatting with Dennis on just behind the scenes. We're going to try it one more time. So if we could get Dennis on to kickstart the presentations again. If the same issue occurs, we will have to just move on to the next one. But Dennis, we'll pray for you.
Yeah, I apologize for technical connection problems. So yeah, let's just go ahead. Since I don't have the presentation, I have to tell you it's like a story. Basically, that Torch is a novel continuous prediction market. So I have to answer the same question that Ethan was answering, like why another prediction market? Well, Torch is a very, very different beast from everything you've knew so far. Of course, you know, occupy news headlines. But if you want to ask a simple question of what's Bitcoin or Ethereum or HBAR price will be in 3 hours and 3 days and 3 weeks, there is no good place to do this at all, because the ranges are rigid. If price fluctuates, you cannot change it. If you want to move the date of the market, it's also super rigid. You need to recreate the market, and that's a big problem for those who really want to look into the future price of the token. Can I just stop here for a sec and check if you can hear me fine?
Yeah, we can hear you. We can't see you, and no presentation either. I think that's you know that there.
Yeah. No need for presentation. I'll tell you everything since like it's not sharing for some reason. So the big problem is basically that current prediction markets do not serve crypto price discovery, and Torch, and hence the name, has this projector into the future that can actually unveil it with the help of information finance and gaming theory principles. So how do we do this? The market that we're building is pari mutual, which means that losers pay to the winners, and it's fully continuous. Anyone can place a bet on any timestamp in the future for any range at all. We can say, Asia bar will be $1 today or in a week if you're a believer, or perhaps, and better still, if you have alpha and you want to earn on this. This is the great place to do so. Like, I don't know, maybe you have a team member that told you that this asset is going on exchange on this date, at this price. Well, you cannot really create a market on polar market for this specific asset at this time, right? Whereas in Torch, it creates a beautiful probability distribution into the future, and we built it during the hackathon and won the first prize to demonstrate how this works. So currently, it is the mathematical model is shaped, but the current prototype is based on slices, right? It's not fully continuous just yet. So we do want to build this new primitive that favors precision, accuracy, and can bring aggregated market expectation that will be available for everybody to participate. Some will just, be bold about certain assets. Others will have some ML models. There are some professional traders that could use indicators or other techniques. But all in all, when put together, this is like invaluable source of information about where market is heading that can be further redistributed to market participants, even as a data feed, paid data feed perhaps. So the model is 0.5% protocol fee as the revenue stream, but when it does prove historically that it can deliver this true prediction based again on information finance principle, which means surfacing, like having this game theoretic model that surfaces value information, in our case that's token price trajectory. And by the way, further into the future, it can be stock or any scalar value. So the opportunity is tremendous and goes beyond their ecosystem if we create those markets that can bring everybody in.
Thank you very much, Dennis. I think we'll go over to the 2 minutes for the questions.
Yeah, so just curious. I mean, I think you said current prediction markets don't have options to essentially bet on price discovery, but I think Polymarket and Galaxy both have, like the daily and hourly markets. Could you just give us some color on how your platform essentially differentiates from those two?
I'll turn off my video and kindly ask you to repeat, and if not, you'll have to cut me because I couldn't hear the question. Sorry.
What is that?
Repeat the question.
Ah, gotcha. So I just curious. Like, I think Polymarket and Galaxy already have like hourly and daily markets. So some color on how your platform differentiates with those two would be awesome.
So I will kindly ask you to write this in the chat, and I'll try to answer because I just cannot hear this at the moment. I'm sorry really about the connection problems. Let's move on. Sorry, gentlemen and ladies.
I'll try and answer that on his behalf because I know his project. His project is a continuous marketplace, so you can actually put any bet at any time in the future. So you can say, for example, the price of H bar will be 20 cents on the 14th of January. And so you can actually have this sort of continuous forecasting system as opposed to it being discrete, i.e. will Bitcoin be up or down in the next 5 minutes, or will BNB be up or down? I think we all get those adverts. At least I do. So that I think is the key differentiator. Maybe what's best, we'll shed the deck after this call, and we can follow up from there. But just it's probably best we get moving and head over to the next one. I think we've got Kia Credit next. Is that right, Sherlyn?
That's right. We have Kia Credit. Go, Joe. Your time. Joe, you are on mute.
Oh, sorry. My
right.
bad. I hope you guys can hear me, and my deck is live.
Yes, we can hear you, and your deck is also shown.
Thank you so much, guys, for having me. Myself, I'm Joe De Silva, co-founder and CEO of Kia Credit. So a bit about Kia. If you run real businesses, you can have customers, you can have invoices, inventory, and steady cash flow. And still, when you go and want working capital, you can get blocked out. Banks move slow. Cross-border lending is messy, not because they don't want to lend to you. It's because they simply cannot price in that SME risk. So apparently what happens is, good businesses stay underfunded, and a lot of global capital never reaches the people who can actually grow with it. So that's where Kia comes in. We know what the problem now is, and how Kia is solving is Kia is building a new credit trail for SMEs on chain. Let me take you through the Kia flywheel. In the flywheel, we do have AI credit scoring and tokenized lending. In AI credit scoring, the borrower uploads his entire documentation into a proprietary agent, which is called KiaFi, which analyzes using 200 plus risk metrics, and an on-chain credit score is assigned to a business in 15 seconds. And what happens in this? And once they're bankable, a traditional off-chain entity immediately transitions to an on-chain entity, which not only price in that SME risk, but also get this business ready for the global on-chain liquidity, where then there are assets that generate future cash flows, such as invoices, inventory, trade instruments. For that matter, any assets that generate future cash flow gets tokenized, and the LPs can now come in and invest into different vaults based on their risk profile, on their APY preferences, and on the industry preferences. The global credit gap is 5.7 trillion, with 131 million SMEs affected worldwide. For us, the total addressable market at the moment is UAE, Singapore, and Malaysia, where 500 billion is the TAM. The fun fact here is these SMEs in these regions contribute to 50% of their GDP and 79% employment, yet they are underserved. Kia Credit right now have 64 borrowers and 85 registered lenders with Kia. We have disbursed $5.5 million worth of loans at the moment and have a positive deal flow of 45 million. We're backed by Hedera, and we are live and verifiable on DeFi Llama. Now, beyond lending, Kia has got two interesting verticals, which is settlement and spending. We call it lending, spending, and settlement. On the settlement side, we do have Swap and EdgeBridge, which act as a swap and settlement. And on the spending side, we do have on end of Q3, we have a Visa powered product that is coming up. Our revenue model is pretty simple. We charge 3% protocol fees on lending, 0.5 on acquiring, 0.25 on on-ramp and off-ramp, and 0.1 on card transactions. With this, we are looking at getting into a 1 billion TVL by 2030 with an estimated ARR of 74.8 million, which is split into 3 different verticals, major being Kia Lending. We're built by a team who has global experience and having handled revenues of over $8 billion and trade finance facility of over 400 million. We also do have pretty interesting notable faces on our advisory board that is helping Kia steer ahead. Our ask is on equity or debt. On equity side, we're looking for a $3 million with the SAFE, SAFT, or a combination of either. And people who want to make money by putting in liquidity, you can come in as an LP and put on our active vaults. In short, Kia, the grand picture of Kia is we are architecting one platform for programmable credit infrastructure, everything on chain, verifiable, and transparent. That's all. Thank you, gentlemen, and I'm open for questions.
Thanks. Where are you guys based? Are you UAE?
Yeah, we are based in Dubai at the moment. Sorry, guys, I forgot to tell you. Like we've got to tell you one more thing. We are doing a POC with one of the commercial bank in Sharjah by mid-July, and we are tying up with one of the biggest PSP in the region that is going to bring in 8,000 merchants. I don't know how I missed that.
Okay, sounds good. Just from my side then, in terms of, are you specifically going after SMEs or is it more retail focused?
No, so we are specific in terms of lending. We are specifically focusing on SMEs at the moment.
Okay, and so in terms of defaults, like how do you guys enforce that, or what's the plan in that respect?
At the moment, luckily, we do not have any defaults at the moment, but that's a great question to ask because one of the biggest risks we envision to see is the credit risk. So we are more focused on over-collateralized loans at the moment. And there is a market for that because we see at the end of the day, we see capital preservation is one of the biggest objectives that Kia has. And in terms of under-collateralized project, obviously, high risk, high rewards, we clearly state in the vaults, and it's of LP's choice whether to come in and fund those vaults.
Okay, got it. And in terms of sort of the data side of things, so what data trains like the credit models for like thin file SMEs, things of that nature? How does that work at a high level?
Everything from great question again. Everything from the constitutional documents of the company that makes us see the company is in good standing, along with the bank statements, any management reports, financial statements that populates a number of ratios, do probabilities on future cash flows, do probabilities on future defaults, and also we also depend on one more factor with the existing credit score in place, where we act as a future-looking credit scoring mechanism, while the current credit score of the company, in case of UAE it's AECB, in case of Singapore, it's SingPass. It gives us how the company performs now, but we kind of go one step ahead and overlooks like what is the company going to be depending on the future cash flows are.
Okay, and in terms of sort of the initial lending capital, say day one, where does that come from specifically?
Yeah, it came from an institutional lender as well as ultra high net worth individuals. Also, we want to say something that
I think you can finish it off as long as it's not going to be.
Okay.
Yeah, you finish up that sentence.
Our focus now, Dara, is we're looking for three types of LPs. One is institutions. We are able to have great dialogues with them. The second one is ultra high net worth individuals and family offices, which we keep them as accredited investors. And third one is eventually when we have the open vault mechanism, we'll be looking at the DeFi public, where we don't want to have dependencies on each other, but three different LPs act in their own capacity. And that's it, guys. Since you guys are in Abu Dhabi, I would like to catch up with you guys or barge into you guys.
Yeah. We can catch up, Joe. But appreciate it. No further questions from my side.
Thank you so much, guys.
Awesome. Perfect. We'll head over to the other side of the finance world from borrowing and lending to Hayat John from Mulk Protocol, who's going to be talking about Islamic finance.
Hi, can you hear me? All right.
Yes, we can.
My name is Hayat John Nazimov. My background is not tech. My background is Islamic investment banking. So all my life, I'm a strong believer in institutionalization. So Mulk Protocol is all about bringing Islamic finance and Web3 or the tokenization into an aligned pathway. So Mulk Protocol is where we make Islamic finance global again on chain. We won the Emerge Grand Prix in Azerbaijan, and we have been incubated. We passed the hackathon by Gobi Partners in the past, and we are based in Singapore. So essentially, we are an Islamic investment bank on chain. So that's where we are, and we connect Central Asia currently, which is currently our focus, to $6.5 trillion Islamic finance globally via asset tokenization. Actually, in a simple words, we cracked the code of building an investment bank, like in the likes of BNP Paribas or Citibank, by way of tokenizing assets. And our focus, given my background, we are very much focused on Islamic finance. So where the pain is actually is the sukuk issuance. Essentially, fundraising in the global markets is very costly. Typical 500 million sukuk issuance would cost $2 to $5 million, if not more. And Islamic documentation is heavy, so the legal cost is another pain. And time to market, because the investment banks have to do the road shows and everything, so it takes quite a time to close the deal. Hence, investment banks can only focus on the very limited number of deals. Whereas with the MOOC protocol, we institutionalize the whole process. So fundraising clicks away, investing taps fast, settlements light speed and 24/7, and the KYC and Sharia compliance is embedded rather than per deal basis. So essentially, we can enable Islamic finance in any country in the world. No need to wait for the country to pass Islamic banking law, and no need to create a separate SPV for each deal. We have created a global issuer out of Singapore, and we are currently working on getting into a sandbox of countries of our focus. This is how we compare. I'll just focus, given the limited time, I'll just focus on we are Hedera native, but cross-chain, thanks to the components of the Hedera ecosystem. We are civil law compatible, which is unseen and unheard of in the Islamic finance world, and we are able to tokenize a fund which creates a digital twin issuance. Actually, our business is scalable. Our business model is scalable. Currently, we are acting as a B2B via tokenization. Later on, we can just provide the rails. Essentially, what it means is we are doing the work ourselves first, rather than providing a product for the market to take it and utilize it. We charge deployment fee only from the institutional investors up to 1%, and we charge the tokenization fee, that is the fundraising fee. And coming from the investment banking background, I know how much it costs if the client were to engage in an investment bank. Also, we provide the market making where we earn the spread. Currently, we are working on a proof of concept deal, 20 million tokenized fund. And this is quite an interesting case. And in the pipeline, we have the government, airlines, state-owned enterprises like a hydro energy company that we are talking to. And these are all Big Four audited. And our North Star metric is the total value tokenized. So we are looking into 500 million worth of value tokenized by the next 12 months. This is our team. We're very much focused, and we realize we don't have to do everything. So we are just focusing on building the business. Tech, we are leaving it to our CTO, which is the Cloud Code, plus the Hedera ecosystem components. Myself, my background is Islamic investment banking from BNP Paribas. And I'm the first graduate of INSEF University, #1 university in Islamic finance. My partner is Kok Jin. He is the top FX dealer in Malaysia for multiple years, where we work together at BNP Paribas. Our partners are QCP Capital from Singapore. They are the market maker for Metagalactic. Golden Hill Asset Management is a multi-family office in Singapore as well. Amani in the global name in Islamic finance. We have a strong legal support. These are my ex-colleagues. Okay, maybe this one is Jake. If you allow, I just want to highlight the one point. The reason why I'm in KL now is to sign an MOU with the hedge fund of Indonesia, who manages 12 billion under assets under management.
Amazing. I think we'll head over to the questions. Well, that will lead into a bit of your question time.
Yeah.
Yeah, just from my side, in terms of Sharia compliance, and excuse my ignorance, but who certifies Sharia compliance? How does it work from a compliance
Me
perspective?
myself, I've been in this industry since 2007, but in our case, this is the Amani Advisors, which is Dubai and Kuala Lumpur based top name in Islamic finance. So they have the 6 Sharia scholars from Kuwait, Saudi Arabia, and Qatar, as well as in Malaysia. So these are the 6 scholars top names in the industry who actually certifies it.
Okay. And in terms of tokenization, does tokenization itself sort of raise any compliance questions when it comes to Sharia finance or Islamic finance?
This is quite a straightforward process for us who have been in the industry. Actually, I advised BlackRock established money market fund managed by Archax to penetrate into Qatar by structuring their product under Sharia compliant structure.
I think I'm just going to rephrase the question slightly, Hayojan. So I think the question was asking, would there be any scholarly opinions which go the tokenization in and of itself would not be permissible, which might, or is it completely fine if you go the is fine?
Very to the point. Thank you for the question. Actually, it depends on tokenization. Is just a method, right, to represent something in a different layer. But what are you tokenizing is what matters from the Sharia standpoint.
Okay.
So all the scholars who review your tokens, they always look at the underlying asset, what is being tokenized.
Got it. Okay, appreciate it. Thank you.
Thank you.
That's it for questions. So we'll head over to the next one. Thank you very much, Hayojan.
Hi, everyone. Can you hear us?
Yes, we can. And we can see Patrick now as well.
Perfect. On screen, you're sharing our slides.
Yeah, can see the slides as well.
All right, let's go. Hi, everyone. I'm Tofu, a co-founder at Apex Audit, working on our technical product design, driving product vision and strategy with experience in the UK government driving digital transformation.
Hi, my name is Patrick, the other co-founder of Apex Audit, working on sales and marketing with previous experience in a startup doing marketing, sales, and product for 3 years.
So let's start with the problem we're solving at Apex. Organizations today are adopting AI faster than they can prove it's safe and compliant, with regulators charging forward to regulate enterprises targeting high-risk industries like legal, finance, and public sector. And that is leaving a fundamental gap as the market approach to address compliance in the intelligence age with retrospective frameworks for deterministic systems has proven insufficient. While non-compliance is attracting fines up to 35 million euros or 7% of global revenue in pending regulations across Europe. Now, how are we solving this at Apex? We are building the infrastructure for enterprise AI compliance from first principles as organizations embed agentic systems into their workflow. Our inaugural product is focused on addressing the EU AI Act by embedding middleware that creates runtime audit trails for enterprise AI workflows, creating immutable audit trails and tamper-evident logs by utilizing a Hedera consensus service to timestamp on the decentralized published ledger. We're using a trustless architectural design, utilizing the Hedera blockchain technology that regulators and any concerned parties can trust independently of any organization. And with our MVP, we are directly addressing the EU AI Act compliance on auditability as trust as our breaking market. And this compliance demands is captured across Articles 6, 9 to 14, 26, and 99, that's highlighted on the screen, where regulators are demanding tamper-evident audit records, transparency of these reasoning systems, human oversight, all executed securely, which Apex is satisfying wholly with zero user friction, automated end-to-end. This is where there's a big gap in the market because they've been built in on compliance framework of deterministic systems on intelligence systems.
72% of enterprises have at least one agentic AI workflow in production. We can be certain that this will reach 90% within the next 2 years, putting us at a perfect position. Our bottom-up TAM is organizations whose AI workflows fall into regulated and high-risk systems where auditability, oversight, and immutable trails are required. This means that all medium and large EU/UK organizations. Our SAM is the segment you see on the right of the screen, all deploying AI workflows that require defensible audit trails. Dara, Arjun, and William, we know you have experience in the finance sector, so you know the regulatory pain. And we also know that Tracy has a legal background. Law firms and legal teams are adopting AI at high accountability workflows, making proof of AI use and human oversight critical. Why legal first? Because high stakes decisions, heavy document workflows, clear need for evidentiary integrity, strong sensitivity to auditability, and easy to understand the pain. The ability to prove what happened is not optional. It is central for trust, liability, and client confidence. We spoke to our competitors like Legora and Equity Labs and found that our offering remains unique. We are going for a tiered pricing model with a minimal base fee and consumption-based pricing thereafter, making sure we can provide our solution to all sizes, making it easy for our clients to understand and buy. Our focus is law firms with a scale to the finance industry, then consultancy and SI next. Our immediate hurdles is getting a technical integration into real workflows and making the compliance story simple enough for non-technical buyers. We have been talking to law firms, understanding the use of AI and the workflows, but also how well they fit our ICP. We continuously speak to people within the industry and market, whether it's system integrators or in governance. We hope to have Hedera as a key technology partner for the foreseeable future of the company.
And we're raising £750,000 at pre-seed for 18 months runway, with 38% of that to be deployed on our product development and recruiting the right talents on board, and 31% to be on our operational infrastructure, and also as expected, a lot on our enterprise security and compliance, and ensuring that we have our founders on board with full-time commitments. We vividly envision becoming the de facto standard for compliance and governance in the era of agentic systems, whilst deepening our relationship in the Hedera ecosystem as our most important.
So I know firsthand what this journey is like to have a market and a great solution. And for Tofu, his product expertise and dealing with regulatory workflow is what makes us perfect.
And just the last point to say, one of the many things my co-founder and I have in common is our resilience and relentlessness, applying and surmounting problems that we care deeply about. Thank you.
The horn spoke. The horn,
the double horn,
is the final authority. Yeah. Let's go over to the questions.
I was just curious, like, I feel like a lot of these workflows, they're going to cover extremely sensitive data. So if you just talk a little bit about, I don't know, like how you process the data or the privacy component of it.
Yes, I can speak on that quickly. So that's something that we have to think about a lot, especially given the EU and the UK have been their data laws are very sensitive. So in my background working in government, we sort of understand how to build sovereign data architectures. So we're looking at large enterprises who have their own private cloud, and we would be integrating with their private data stores. So they have their data domicile in their region with full control over that. And then we're looking at SMEs where might be our entry markets. We will create private data clouds that are multi-tenant, that are resident in those regions where we're serving those clients.
I got you. And then as part of the go-to-market, I think you mentioned some law firms as well. Like, in terms of those conversations, are these right now more exploratory? Are there MOUs in place? And to be clear, we don't have extremely high expectations for like a super, seed stage company, but, let's say those sales cycles take a bit longer. Do you have maybe some other, maybe lower hanging fruit or targets that you kind of have in the near term where you can actually kind of prove out some of these use cases?
Yeah. So, sorry, will you go? I'll just quickly and then you go on. So for context, we're barely 2 months old. We're a very early stage startup, and we've been thinking about this a lot. So our conversation we'll be having is mostly exploratory stuff to understand them and having them on board as design partners. And we're hedging against the consumer finance side of things because they also have the same pain. And in the fintech sector, it's easier to break into the market. Now let Patrick speak much more about that in detail.
Yeah, so maybe not. I think Tofu covered your question there, hopefully. But in the interest of time, we'll move on.
Oh,
good answer. Does she have any questions?
Questions from you?
The questions are too difficult. You know, I can hardly answer them. Questions
Okay,
about
cool.
life.
Deep ones, yeah, deep ones. Well, thank you very much, Apex Audit. That was a really good presentation. We are now at our final presentation. So it's definitely not, what do they say? Last but not least, we've got Linksify coming on. Jason's just coming on the stage. And then is Kevin going to be joining too?
I don't think he's watching right now. I'll be presenting.
Amazing. Well, yeah, can't see your screen quite yet, but
should be sharing.
Might be a backstage thing.
Okay.
There we go. I can see a loading bar now. Didn't load anything though.
All right, there we go. You see it now?
I think it's loading. We'll give it a bit of time.
All right.
There we go.
See it up on the
just give it another 10 seconds or so, just because it's quite pixelated right now, and I think it will clear up.
All right. Can you hear me fine?
No. Bit robotic.
Oh no. Okay. All right. Should I start?
Jason, if you can hear us, you're buffering a lot. I think what we can do, maybe try and leave and rejoin. If not, we'll probably have to just wrap up because, well, it's almost an hour and a half. Bang on time. And we'll be able to share the deck, of course, with the Hashgraph Ventures team. Let's give it one more go, and then if not, we'll call it a day. Backstage, do you mind just dropping a message in the chat if Jason's in the room, or did he leave and rejoin?
Jason is left, but he rejoined again.
Okay, we'll try it. We'll get him on. We'll try it. If it doesn't, we'll say the closing remarks. So, Jason, may be worth trying switching off your camera.
I can't hear anything. No.
Mic check. Can you hear us?
Can you hear me?
We can hear you, Jason.
There we go. Can you see the screen now?
We can see the screen. It's looking, I think, clear enough. Just
right.
might be worth, Jason, just trying to turn off your camera just so we can maximize that bandwidth to the screen and audio. I'm not sure if that's a myth, or I think it is. I think it is science. I think that is science.
It's worth trying. Awesome.
It's
All right.
even
Well,
better.
I'll get. Yeah, perfect. All right. Well, thank you for that. Let me get started then. All right. Well, hello and welcome to our pitch for Lynx. We're making yield farming simple. So DeFi yield isn't built for Nicole. If you compare her experience to traditional assets when she is investing in an index fund, she doesn't research all 500 companies in the S&P. She searches for the top funds and picks the ones with the best returns. She doesn't have to constantly chase the next index fund. Web3 is the opposite. You're constantly shifting your capital, researching tokens, and choosing from thousands of options with low yields. Without Lynx, Nicole spends her time frustrated, losing time researching vaults, LPs, tokens, and more. In the end, due to frustration, her capital sits idle. With Lynx, it's simplified. No obscure tokens, no wasted time, frustration, just one swap or mint leads to peace of mind. So how it works. We have worked on simplifying the process for users as much as possible. Users simply need to mint or swap for our one token. That's it. As soon as that happens, the user's capital goes to work, with all the earnings being fed back into the underlying value of the vault. All users need to do is hold their liquid token. So why now? To start, the product is proven. C20 and other aggregators have proven this business model can be successful. The second compelling reason is that Hedera is ready now. Mainly, yield-generating options on Hedera can now support a product like Lynx. The final key point is that regulations are forcing money to this model potentially. If the Clarity Act passes, all the money in a hold and earn option will have to move to activity and earned products like Lynx. For our market, we realize that we don't need to look much further than the $2 billion that is natively staked on Hedera. About 63% of HBAR is staked. Before we even set foot on another chain, we have a chance to capture a market with $2 billion up for grabs. With just 1% capture as our first move, we would reach our target goal of 20 million TVL, with plenty of room to grow on Hedera and cross-chain. So we do have competitors, but none of them are built for Nicole. Instead, there are hundreds of vaults, potentially even thousands of vaults sometimes. Meanwhile, we offer just one. We strip the guesswork and the APY chasing down. Lynx is simpler, and our estimates point to potentially higher yields as well. So we are pre-TVL, but we're not pre-progress. For the past 8 months, we've been building in public, shipping to real users, and gathering feedback and forming partnerships. So for some of our partnerships, we won a grant with HBank, and we are building XUSD with them now. We also have soft commits from other members in the community for further partnerships. For our products, one of the aspects I'm excited about is that we have shipped multiple user-driven updates. Based on user feedback, we made it easier to mint. We added arbitrage agent to ensure a healthy LP price, and we worked on a self-audit, all while winning 5 hackathons at the same time. For our revenue model, during that 8-month build in the public phase, we were able to identify that we can make money off of rebalancing. Our goal is to focus on generating greater profits by mitigating impermanence loss and allowing users to maintain tighter spreads. We'll take 7.5% of those profits generated. We also identified that our arbitrage agent offers value to ourselves and to our users by keeping the mint price healthy. Over $1,000 of swaps, we generated near 9% APY. So why this problem found us is we were investors in C20. That's why we know the problems we talked about are real, and that's how we know the customers are real. For our team, Jason, myself, I have been shipping products at enterprise levels, such as the TSA career mapping system, and have been involved in Web3 since 2015. Kevin, our CTO, has 15 years of experience on projects ranging from Web2 to Web3. And our final teammate we are missing is our community manager. So what worries us? Audits require a leap of faith. Our TVL to break even is high, and Hedera skews technical. On the other hand, our TVL after 20 million is pure profit, and while Hedera users are technical, they are also early adopters. So we think there are 2 potential ways we can work together at this time. Option 1 is potentially be our launch partner. Help us land our first audit. An early partnership will give us legitimacy to convert users as well, and allows both our teams to have a low cost of entry. Finally, is be our first institutional investor. If we can prove that our 10% APY is real and pass our first audit, you can become our first investor. So that's our full pitch deck. We have a couple questions down there about our NFT launch campaign, our partnerships, and if you'd like to talk about our crowdsourced multi-sig keyring.
That's really great. Thank you so much, Jason. Let's hand it over to the team. Ah, look at that. Bang on time. The horn has spoken. We've got 2 minutes for questions.
Yeah, I understand it's still very early, but how do you think about growing this from where it is now to, 100 million TVL to $1 billion in TVL? What does that growth story look like from here?
Our first options right now is we want to really focus on Hedera. We noticed again that 63% of HBAR is staked. And if we can start converting that capital into our TVL, then that's perfect. We plan to do that by using NFT campaign. Monode, part of the incubator, gave us some really great advice on how to use those to further launch our product. So we want to start there. And long-term vision is cross-chain.
Makes sense. And I think one of the things just in DeFi in general is there's been a lot of hacks this year. I think security is a big concern. And when you think about bringing back that institutional trust and just trust in DeFi in general, I guess where do you feel like DeFi is as a whole, and how do you feel like you can bring trust back into this sector, especially with what you're building?
Yeah, that's I think you kind of nailed the question right there. Is exactly what we wanted to do. Is C20 was a product that worked and was successful, and they were centralized, and that just left to the funds being used improperly. And that's kind of where we want to start, is making sure it's decentralized, it's hands off for us, and it'll last for a long time. It's not going to go anywhere. Yeah, I think that's our main focus.
Makes sense. And maybe one last question. Obviously, with talking to users, just looking at your competitive positioning, what's been the initial feedback so far that you've been getting for the product?
Our initial feedback's been great. So we've gotten multiple Reddit posts over the past 8 months, and we've reached 100% on our upvotes. And the feedback has been essentially what we've built. It was that minting was more difficult. The price wasn't great on our LP, so we built the swaps. And then the last one that we've been getting a lot of feedback on is the audit. So we've dealt with decentralization using keyring, and we want to deal with the audits last. Yeah.
Makes sense. Thank you.
That's really great. Well, I think at the sound of the bell or the horn, that's the end of the pitches. I don't have anything more to say. I will open it up to any sort of closing remarks. Maybe Hashgraph Ventures, if you want to jump in and say something before we wrap up. But if not, we'll give the mic to Sherlyn to say the final words and wish everybody a farewell. But Hashgraph Ventures, anything from you guys?
Just thanks. We appreciate being invited in. Obviously, we had some problems that were outside of our control, but in terms of that, any of the guys that didn't get a chance to speak or pitch, then we're happy to receive their deck and have a look and give some feedback accordingly. But it's been a pleasure, guys. Thank you so much for having us. Definitely some interesting projects being built. Some things that we 100% will want to explore a bit further. So this has been a very worthwhile experience, and again, thank you for allowing us to come on and have a look at what's on offer, and hopefully we can do something similar in the near future. But appreciate it, guys.
Well, I think that there's a sweet spot. I know you guys, well, obviously being less than a year old, you guys haven't found your unicorn yet. Neither has Hedera. Could this be the match made in heaven?
Possibly. I'm sure we can. Yeah. No, we can find something between us, right? So we're actively searching, we're actively investing, but it would be nice to find something and collaborate on something that could be that said unicorn that catapults this network to the next level, right? So
that's the go.
Always on the hunt, Jay. Always on the hunt.
Good stuff. Sherlyn, I'll hand it over to you.
Wonderful. Yeah, what a fantastic set of presentations from our incubator participants. So yes, clap for you all. Thank you for your effort. Yeah. I hope you enjoy watching their pitches as much as we have. I must say the countdown timer and the buzzers certainly added to the excitement and kept everyone on their toes, right? So on behalf of Angel Hack, we'd like to extend our sincere thanks to everyone who made this program possible. Jake, thank you so much. And for your team as well, Hedera, Hashgraph Ventures for being here, our mentors and workshop speakers who are watching right now, our judges who are also working hard at the back end to judge each and every presentation. Thank you so much. Our partners from Headstarter, Kabila, HGraph, and Hashgraph Online. Thank you. Every member of the organizing team, thank you. And most importantly, congratulations to all of our founders. Over the past 4 weeks, you've invested your time, embraced feedback, refined your ideas, and demonstrated what can be achieved through dedication and collaboration. So today's showcase is only one milestone in your startup journey, and we're excited to see what's next. To everyone watching, thank you for joining us. If you're interested in the future Hedera programs, be sure to follow Hedera community, join the Hedera Discord, and keep an eye out for upcoming hackathons and incubator opportunities. Once again, thank you for being with us today. On behalf of Angel Hack, the entire Hedera Incubator team, we wish you all continued success. Have a wonderful day, and we'll see you at the next Hedera event. Right? Thanks, everyone. Have a great day.
Thanks, everybody.
The need for a more interconnected world is fueling new decentralized technologies and new ways of doing business. Hedera stands at the forefront of distributed ledgers, where every interaction is not only trusted, but fast, efficient, and secure. While traditional blockchains struggle with speed and fees, Hedera's network settles transactions in under 3 seconds for a fraction of a penny. And the proof is in the numbers. Hedera is uniquely governed by a council of the world's leading institutions, ensuring transparency, trust, and decentralization. It's no wonder Hedera is the leading choice for enterprise and DeFi use cases. Everything from real-world asset tokenization to AI data integrity. Discover the only decentralized network with the governance, scalability, and security to power the new digital economy. What future will you build?